Hey, what's up? This is Andy Hurley from Fall Out Boy, and you're listening to The Expansion Project.
Welcome back to another episode of the Expansion Project podcast. I'm your host, Fat Tony, and on this show I have casual yet deep conversations with professional athletes, entrepreneurs, coaches, authors, bloggers, musicians, and anybody else that I find to be either interesting or successful. And the point is to expand my mind and yours while motivating and inspiring people along the way. My guest today is Joshua Dorkin, who is the founder and CEO of BiggerPockets.com, which is an online community for real estate investors. Josh started out as a real estate agent in the Los Angeles area and then began investing in real estate himself. And at that time, he realized that there wasn't a lot of information that he was looking for available, so he wanted to create the place to have that information and be able to share it with everybody else. At the time he launched BiggerPockets.com, Josh was actually a high school teacher and ended up quitting that job to run the business full-time, which is actually a pretty similar story to episode 7 where I interviewed Steph Gaudreau of StupidEasyPaleo.com. So just as a side note, go check out that episode if you haven't already. BiggerPockets actually started in 2004, and now it has a very extensive forum board of real estate investors. It also has a blog that has a ton of information, and it has the highest ranked real estate podcast on iTunes under its umbrella as well. So the site gives away a ton of valuable content for free, and then you can pay for membership to have access to more things like a marketplace where you can analyze properties and deals. Currently, Josh lives in Denver, Colorado, and the site has grown to 320,000 active members and has about 1 million monthly unique visitors every single month. So to keep up with this demand, Josh has hired a staff, and now he has 19 people working for him. On the episode, I broke the interview into 2 parts. First, just about actual real estate investing. The second part about the actual business behind BiggerPockets.com. So whether you're interested in investing in real estate or business, I think you're going to get a lot out of this episode. Before I welcome my guest today, I want to thank you guys for the great feedback and for sharing the show with a friend. Also, thanks to everybody for all the 5-star ratings and the reviews over on iTunes. I'm going to continue to read some of the reviews here on the show. So thanks to Mark Peacemaker for this one. He said, "The Expansion Project has been a huge inspiration to me. The Mike Doyle and Dave Mirra interviews enlightened me on numerous patterns to take in life. I think this podcast took a leading role in giving me the boost I needed to go outside of my comfort zone and make the decision to go back and finish college. Stay rad." So thank you so much, Mark Peacemaker, for that. Good luck with college and whatever path you end up creating for yourself. Also, guys, just a reminder, please go to the expansionprojectpodcast.com and click on the affiliate links on the right side of the page. Go buy some cool stuff and help out the show. Now, I'll welcome my guest, Josh. Thanks for joining me today. How are you doing, man?
I'm doing great, man. Thanks for having me.
Yeah, no problem. So first off, did I get all my facts straight, or did I leave anything out in my bullet point list?
I think you nailed it, man. You know, we're pretty awesome. So are you.
All right, cool. Sounds good. So I believe in kind of full transparency, and one of the things that I'm always fascinated by is how people got connected. So some of my shows, I talk with my friends, and I tell a little bit of a story how we first met or whatever. But with you, it was pretty interesting. Somebody named Hillary that works for you reached out to me and said you'd be a good guest for my show, and of course I agreed. Can you explain kind of that marketing strategy of having someone reach out to different podcasts and stuff? 'Cause I think that's really fascinating.
Yeah, sure. So, we started our podcast about 2 years ago, and when we didn't know what we were doing. We had no idea. We're like, all right, podcast, cool. This was before Serial and before they became really popular, and we noticed that people love the medium. People want to be able to consume information that they want to consume when they want to consume it, and so we grew this audience from nothing to a fairly sizable audience, and as we built our brand, we started to experiment with, just kind of being guests on other shows of people that we knew. And we weren't seeing a direct, huge pop in our listenership or a direct, huge increase in visitors to the website. But we noticed that the more that we could kind of be everywhere, so to speak, the better it was for our brand, and people would drip in, and so that has been a strategy of ours for a long time, which is we want to be everywhere where our listeners are, and we want to be everywhere where our potential listeners or our potential audiences. And so your audience, I mean, you're talking to people who are looking to expand themselves. You obviously have the BMX background, extreme sports. Well, there's people who are making money doing things. And so, it doesn't matter what you do. Real estate is something that we all can learn and we all can figure out how to make money with. And so we want to reach out to people wherever they are and help them learn about real estate.
Very cool. Yeah, I think it's a great strategy. Another guy actually reached out to me not too long ago who had a website over in England called I Will Teach You Anything. Wait, no, I'm sorry. I Will Teach You a Language.com.
Oh, nice.
Just by him reaching out, it allowed me to get connected with somebody that I normally wouldn't have got connected with. And I learned about, a business that I wouldn't have known about otherwise. So it's been a cool process for me, after starting this podcast to get connected with random people like yourself that I might not have ever met,
Yeah.
So I appreciate the outreach and again, thanks for being here.
Well, thanks, man.
So I want to break this interview into two parts. And first, we're going to talk about real estate investing. So you obviously were an active real estate investor and then started a website to help other investors. But you were also a real estate agent. And I'm kind of curious, as an agent yourself, why do you think that more real estate agents don't become investors themselves? Because for me, it seems so natural that they understand the world of real estate so well. But from my experience, it doesn't seem like as many of them actually do it as I would have maybe assumed.
Well, Fat Tony, I got to tell you something, my man. This is one of the great mysteries of the universe.
Okay.
I've been doing this for almost 11 years, and I've asked that question countless times, and I don't ever get a satisfactory answer. Mm-hmm. It doesn't make sense. It doesn't make sense. Real estate agents, like you said, they have an intimate knowledge of real estate. They get it. They understand it. What they don't get and understand, for the most part, is investing. So there's no requirement when you go to get a license to actually understand how to evaluate a property. There's no requirement for you to understand cash flows and things like that. The only requirement is that you understand the basics of a house, which is obviously key. You learn how to sell and deal with customers and kind of review contracts. But beyond that, the financials and the actual evaluation part doesn't come into play. And so what you're left with is this group of agents and I don't know what the actual number is, but I'm going to say 5 to 10% at most of agents that are probably pretty savvy as it comes to investing. But beyond that, the average agent doesn't know anything. And that's the scary part for me is you get these agents who don't know anything, who are helping people who may be interested in buying properties as investment, and their advice may not be the best because they don't actually know themselves what they're telling you. Mm-hmm. And so that's I think a dangerous thing that's out there. And so for anyone who's listening to your show now, if you are looking to get into real estate investing in any which way, you want to make sure you vet your agent and make sure that they actually understand investing. Yeah,
when I was kind of cold calling agents in the Michigan area, I ended up investing in Saginaw, Michigan, because I had some friends that bought properties there. That was the first question I asked the agents when I got them on the phone was, do you have any investment properties of your own, or if so, how many,
Yeah.
Because it was super important to me that they understood what I was looking for and what I was after,
Absolutely.
So, there's a lot of paths to success within real estate and real estate investing. So besides creating your business based around investing, why did you decide to take that path of real estate investing?
Sure. So I got introduced to real estate as investment when I was in college, and I roomed with a guy. We had rented an apartment, and I don't know what we were paying. I have no idea, but we were in. I think it was it was an 8-plex, and no, it wasn't. It was I think a 12-plex, and we're looking at this place, and we're in B school together, so everything we do, we're analyzing businesses and things like that. We're like, wow, we're paying this person all this money in rent, and instead we can buy the building theoretically, and then collect rent from all the other people, and then kind of not have to pay as much rent, or not have as much of a payment ourselves. this would be awesome. And we were a bunch of broke college kids, and we're like, oh, well, we can't do this. This doesn't make sense. And we weren't going to go to our parents to do it. So inevitably, we did nothing. And fast forward a bunch of years, my brother reached out to me. He had come across some kind of real estate course and some friends of his that were into it. And he ended up buying some property. And he said, hey, Josh, I'm buying real estate. You can actually do it. You can afford it. Why don't you come in and buy some property? So I, like you, bought property at a distance. I bought in Missouri, and I didn't know what I was doing. I was like, I'm a smart guy. I've got some money on the side. I figured out the market. I'm making some money there. Let me just chuck some money into real estate. And I did that, and it was a mistake. It wasn't a mistake buying real estate. It was a mistake buying real estate not knowing what you were doing. And that is why Bigger Pockets was started, because I realized that I needed help with my real estate. I realized that there was a need for this knowledge, not just kind of academic smarts, but there was a need to actually understand the real estate investing space. And I didn't understand it. And I looked at the landscape of what was out there information-wise, and what I found was, there was a lot of information, but most of it, 99%, again, a number out of my backside, was being sold by the kind of get-rich-quick guys, the gurus, and these guys who have courses, and the chicks in bikinis, and speedboats and mansions, and I don't know, something about that just stunk of shady to me, and I just didn't trust the information that was being sold, because I figured if I buy this information, they're going to sell me something and sell me something else and sell me something else until I got no money left. And that is the path of that form of real estate education. And so I said, let me just create a place where I can go and ask questions to other people. I had no intent to build a business for other people. It was totally selfish. It's like, yeah, let me get in there and teach myself. And ultimately, people started to show up. They started to help me. And I started to see other people help other people and realized I was onto something. Now, it took a long time for this to really build and grow into something spectacular. But and that was all about just hustle and maintenance and being able to kind of stick it out. But yeah, there was a need.
Yeah. So why okay, so your personal investing, when you started investing in real estate, was kind of the buy and hold, right? You had rental properties. So why did that stick out to you as opposed to, say, flipping or wholesaling, or even a different type of investing like stocks and bonds or anything else? Like what was it about the real estate rental market that kind of stuck out to you and was something that you were like, I need to do this with my money?
Sure. So first, I knew nothing about wholesaling. Wholesaling is just this made-up thing that, the average American and the average global citizen would never know what the heck it is. So wholesaling didn't exist as far as I was concerned. Flipping, I don't think the flipping shows were on and happening back then. And I'm not a contractor. I don't know how to flip a house. I don't know how to, put in a bathtub. My dad was an electrical contractor, and I kind of shunned him as a kid. Not shunned him personally, but I kind of was like, what do I need to know about electrical contracting? I wish I did that. I wish I went to work with him. I wish I learned what he knew, because that would have changed a lot of what I did. But, the only thing that really made sense in terms of the real estate space was buy and hold. Now, I had been investing in stocks. I had done stock trading. I actually worked for a stockbroker at a company called Payne Weber, which no longer exists, in New York City. When I was, I think, 18 or 17, I interned there. So I knew a lot about the market. I had invested in stocks and invested in options, had played the market, never got into bonds. But real estate was kind of this, it was a great, quote unquote, passive income source. It made sense. I could buy a piece of property, put a manager into place, hire this person to oversee the property, and then as long as I bought the property at the right price, that I'd see income coming in above and beyond all my expenses. And in theory, that's really easy, right? In practice, most people don't actually understand what that means. And I didn't understand what it meant. I didn't understand the dangers of vacancy rates. I didn't understand the dangers of not screening tenants. I didn't understand a whole lot of the numbers that most inexperienced people like I was didn't know. Most people think you buy a property, you pay the mortgage, right? You pay your insurance and you pay your taxes, and everything left is money. You're good to go.
Mm-hmm.
But there's a whole lot more. There's capital expenses. There's vacancy
and we'll get into that
rates.
a little bit more in just a bit. I have a kind of a follow-up question to that.
Sure.
But before we venture off in that direction, quick story. When I must have been like 15, maybe 16. I remember I was saving up to buy my first car.
Nice.
And my mom was kind of bragging to an uncle of mine, saying that I'd saved up this money and I had all this money in the bank. And my uncle was an investor, and I didn't really know it at the time, and I wish I would have kind of followed up on it more. But he kind of lit up and he looked at me and he's like, kind of jokingly said, "Oh, do you want to invest some of that money?" And I lit up right back and I was like, yeah, how do I do that? Like, what does that mean? Like, yeah, I want to do this. So, point of that story is that when I was pretty young, I knew that, money could make you money somehow. I didn't know how, but that was kind of just a mindset that I had built into me, and I'm not sure where that came from. So I'm curious, did you sort of have a similar mindset when you were young? You said you were already working, in New York on Wall Street or something similar when you were pretty young. So was that kind of always ingrained in you of this investing type of mindset?
So my parents and grandparents, every generations back, they were in business. They had their own business, or it was never, I'm an employee for somebody. It was always, I'm going to create something. And so I learned that, as a kid, I worked for my mom. I always worked. I would go in, I don't know what I made, but, maybe $20 a week or something. And, I'd run around and help customers, and I'd help deliver garments for her. She was in the garment business. My dad had a business, my grandpa. And so there was something in there. I think it was just having that kind of ingrained into me that you got to work hard. And then that was the work hard part, but the investment part, I think that was just, I don't know. I think I came across an issue of Forbes. I know I was probably in middle to early high school, and it was the richest people list on Forbes. And I saw this, I was like, oh, this looks interesting. And I open it up and I'm reading these stories about these rich guys. And I'm like, and I wasn't this guy who was like, oh my God, I got to be this rich guy. But I was fascinated by how they grew things. I've always been a curious person. So I've always wanted to kind of understand how things work and how people accomplish what they accomplish. And I think reading these little snippets, these little stories, guys, Gates and Buffett and, the builders, the Walmart guys, you name it. How do they take an idea and transform it into something bigger and build upon it? And that was always interesting to me. And so, that was another portion. And then on the investing side, I think it all just kind of goes hand in hand. Money comes with business, goes with investing business. And so, yeah, I don't know. I think I was born with this disease of like fascination and money for the purpose of making money. But I'm not obsessed with money. So I've never been obsessed with it. I was obsessed with saving it. Always obsessed with saving it. Like I would get an allowance and I'd probably save 3/4 of that allowance and not blow it on candy and Snapples and things like that. I would save it, which allowed me to start investing in the market when I was in high school, which allowed me to buy my property as I got older and so on and so forth.
Very cool. So kind of keeping on this same track with the mindset, I've talked a lot on my show about how a book called Secrets of the Millionaire Mind by T. Harv Eker has really had a huge impact and legitimately changed my life. So I'm curious what you think about learning how to change your mindset before you invest. Because to me, when people ask me, like kind of, beginner people like, oh, what should I do? Like I've recently had a friend, email me like, hey, I hear you talking about investing on your show and stuff. I've got $1,000. Like, what should I do with this? And my first thing is change your mindset. You know what I mean? Don't go with that $1,000 and put it into, a fund of some kind or stocks or whatever. Use that $1,000 to buy something like Secrets of the Millionaire Mind and a couple other books and really change your mindset so that not just the how, but kind of the mental aspect of the money game. So I'm curious what your thoughts are on that.
Sure. So I read the book a long time ago. I couldn't tell you anything about it, but I think you're right. In fact, I was just in New York and I was talking to a group of people from our community about why do you do what you do? So these are guys who have decided I am going to be an investor or I am an investor in real estate. And, I think the trap that a lot of people fall into as it comes to money is money for the sake of money. Hey, I need to be rich to be rich. And what they forget is there's a reason, and so, most of these folks have families and they've got kids, and, why do they do what they do? Well, they do it because they want their kids to have a good, they want to live a decent life and they want their kids to have a great life. But what a lot of people do is they fall into the trap of, I'm going to work a first job, then my second job, which is real estate investing. I'm going to work that. And then, I've got no time left for the one thing that I'm working for, which is the family. And so mindset is absolutely paramount when it comes to investing. You've got to understand what your goal is. Why are you getting into, whether it's stocks, bonds, or just, generally, or real estate? You've got to understand your purpose. Savings. I mean, most people, you start with $1,000. That's great, but do you know how to actually save money? Do you know why you want to save money? Do you know how to budget? I mean, I think people jump from, I'm making money at a job to I'm going to start investing before they go to step one, which is I'm making money. Let me start saving it, Richest Man in Babylon style, right? And I'm sure you've probably talked about that book. If you haven't, now is probably a good mention of it, The Richest Man in Babylon, which is an amazing book. But, the first dollar that you make should go to you. It should go to, paying to put away for saving. Mm-hmm. And whether you're working at McDonald's making, well, soon to be $15 an hour, or whatever it is that you're doing, you put those first bucks away to save. Everybody can save. It doesn't matter who you are. Everybody can save money. And whether it's a quarter, per paycheck to $1 to 50 to 100 to 10,000, doesn't matter. Everybody can save, but you got to sideline that cash and decide, I'm going to start saving. And that's a mindset thing. Mm-hmm. You can't do that unless you have the mindset to do it. So yeah, you've got to have the mindset, because if you don't, I think you're just going to do it for the sake of doing it and not have the background to understand why you're doing it and what's kind of going to follow from there.
Yeah. I've never mentioned The Richest Man in Babylon. I did read that book. It didn't have quite a profound impact on my life necessarily, but I do recommend people check it out. And I'll link to that in the show notes as well. So kind of on that topic, say besides reading The Richest Man in Babylon, or besides reading Secrets of the Millionaire Mind, how would you recommend that somebody kind of go about developing their mindset before they become an investor, so that they can really be prepared for it?
So as an aside, along this line of questioning, before I got married, I went and I interviewed people. Not like formal interviews, but I'd grab random people on the street, and it wasn't like 20, 30, 40-year-olds. I'd grab like the 70 and 80-year-olds, and I'd say, obviously they were together, and I asked them, are you guys married? Great. Yes. Okay. How are you still married after all these years? What's kind of kept you going? And that gave me a lot of answers to the questions I wanted. Was I making a right decision when I was getting married? Was I marrying the right person? Things like that. Well, I think the same thing applies for investing, and whether that's stocks or real estate. I think you want to talk to people. I think getting an idea of what goes into it, and kind of understanding the business, understanding the ins and outs. Investing in stocks, you're not just buying a stock. You're investing in a company. So what does that mean? You actually, I think people make massive mistakes by buying stocks, picking stocks, unless they actually understand how companies work, understand financials, because you're buying into the people that are running that company. And if they're not running it the right way, despite what the media tells you about a stock, fundamentally there's something wrong. That's the nice thing about real estate investing is, the person that controls the fundamentals of the asset is the person that buys the asset, you. So if you buy a house and you pay too much money for it and you're hoping to rent it out, you may not make money. You may lose money because you screwed up. With a company, you buy, hey, I'm going to buy Apple stock or Walmart or whatever else it is. You better be sure that you actually understand what they're doing, how they're doing it, or buy a fund. buy a collective of stocks. So you're not investing in one single thing. You're going to be far safer doing it that way. Mm-hmm. I don't know if I answered your question.
No, that's great. And I think your aside about interviewing older people about their marriage situation, I think that's really, really cool, actually. So going back to a bit of what we were talking about before, or what you started to get to, about people think, you kind of pay your taxes, pay your mortgage, pay your insurance, and then you're good to go. So a lot of people, kind of myself included, thought that was what you did. And then after that, cash flow comes in. But of course, now that I've got a 3-unit and 2 single families, now that I've got this going, I see that, I'm really not taking money out of this business. Like the money's in an account for those properties, and I'm not touching that money. And it's not even really growing that quickly at this point. There's equity growing in the properties, which is great, but I'm not actually taking that money to pay for anything in my life. So at what point do you feel like somebody can actually start paying themselves from their real estate properties?
I think that's a loaded question. It's going to depend on who. So here's the thing. I mean, it doesn't. There is no one path to real estate investing success, and that's one of the things that a lot of these kind of get rich quick guys will tell you is, you do my way, and that's the way to success. And I say that's a load of crap. Everybody's going to have their own path, and it's going to be based. Your path should be determined based upon who you are, where you are, your financials, your family, you name it. So you've got X in the bank, and you're X years old, and you're working a job or you're not working. You've got to look at the big picture and decide, hey, do I have enough on the side to be able to take money out? On a rental property, things happen. The capital expenses, the CapEx as we call it, that's like fixing a roof, replacing a boiler, things like that. You need cash. You have to have cash. You cannot buy a rental property and not have cash on the side, because things will go wrong. And so the nice thing, it's not the nice thing, but so the important thing is that you understand that going in, right? So if you've got, say you've got $20,000, $25,000 in the bank, you decide, hey, I'm going to put that into a rental property, and you don't have anything more, and you don't have the funds for when things go bad funds, you're going to be in trouble, because things will go bad. Now, if you have that same amount of money and you analyze the properties and you realize, okay, well, let me go and buy a property for 15 down, use that extra 10 as my kind of on the side when things go bad fund, and or just in case, or things are going to happen. You now have the resources for when things occur. So when you're analyzing these rental properties, I mean, so you had mentioned mortgage, you had mentioned interest and taxes. Well, that's great. There's also, as I had mentioned, vacancy factor. So you've got a rental property. It's going to take you some amount of time to actually find somebody to rent it out. If you buy it and it's already rented out, the chances are, and somewhere in the next 1 to 5, 10 years, you're going to lose your tenant. And then you're going to have to fix up whatever got destroyed, because even good tenants, there's going to be damage. So whether it's repainting, recarpeting, and then you're going to have to find a new tenant. That takes time. So that's your vacancy factor. You have to actually factor that in to your equation beforehand. If you do that, now you've got enough money. You realize, hey, I'm going to need this much money for vacancy. CapEx is the same thing. Make assumptions that, hey, that roof is 25 years old. I'm going to have to replace it in the next 5 to 10 years. So you're going to have to figure out, how much does that roof cost? What's it going to cost to replace? And when are you going to do it? Then you can break that up over X amount of time and say, all right, I'm going to do it in the next 10 years. Well, then factor in that $15,000 roof divided over 12 times 10 years, 120 payments, and now you've got your CapEx for the roof. Well, what about the boiler? What about the hot water heater? What about the fence that's going to fall down in 5 years? All these things you're going to have to account for up front. So there's lots of things that people forget about these things, and it's important that you understand that these things can and will happen, and you have to factor that into your purchasing decision before you buy a rental property. And I don't know if I'm allowed to plug, but we actually built on our site. You can edit this out if
No,
not.
please go ahead.
We built on our site a calculator, a rental property calculator, and it kind of takes all these things into account. And so the reason we did it was we realized that people were buying properties and finding themselves upside down underwater because they didn't account for all this. I did the same thing. You did it, I did it. And so, we said, hey, let's build something that's going to allow people to analyze a potential buy and make sure that even if they're not fully aware of everything, it's going to ask them the questions to make sure that they can at least look at and think about these other things that they're not considering.
Very cool. Yeah, so it was definitely a loaded question, and the point wasn't necessarily to get a straight answer. It was just to get you to talk about that kind of stuff, which is exactly what we did. So thanks for that.
Sure.
And it was a good way to kind of get some of that information out there because, I know generally speaking, like what my audience is for this show, and I'd love to try to expose them to some of this stuff. And I do think that a lot of people listening probably assume like, I've mentioned talking about, my rental properties. I figured they probably thought that I was like taking money from these or using that to travel or whatever I was doing. And that's not the case at all. And you're right. There are lots of things that come up. This past year, I think just in 2015, the boiler or furnace or whatever, the heating unit in my Michigan property went out. That was like $2,000. An air conditioner went out in one of my Louisiana units. That was $4,000. The roof in Michigan's got to be replaced pretty soon. But I think, what I would almost fear is that people would hear this and sort of be scared away a little bit. And that's not the intention. The intention is just to kind of let people know, like, these things do come up. But if you're prepared for it and you've got that money set aside and you've got the account that's specifically for this investing, then you're covered. And if you have a good manager that you trust, like I do, you don't really have to deal with it. And so, you talk about, oh my God, an air conditioner, a heater, blah, blah, blah. Like that could sound pretty stressful to some people. But the way I've got it set up is that, my property manager called me from Louisiana. He's like, hey buddy, sorry, it's going to be $4,000. And I remember this distinctly because it was a pretty cool feeling. I was actually at the bowling alley with my niece when I got the call and I was like, okay, well here's the credit card number. Go ahead and run it. And then I put down the phone and went back to bowling. You know what I mean? So as long as you've got the money off to the side, and you've got the manager in place, like it's not really, you're not sweating it, which is a pretty cool feeling to know that somebody's taking care of your investments for you.
And just really quickly, and I know I've been kind of cautious, and I want to flip it for your listeners because I think they're going to appreciate something I'm going to tell them. But, on the managers, when you hire a manager, that's probably the second most important decision that you can make. So first is actually buying the property at the right price. Second is actually finding the right manager. And I've been burned by a bunch of managers. So it's exceptionally important that you interview and vet the managers before you get into bed with them, because it's very easy for them to do lots of things like, hey, yeah, you need this when you don't actually need it. Mm-hmm. So just something to be aware. But, you mentioned that, I potentially may have been scaring people off. Here's kind of a cool concept. And I think, at least my understanding of your audience, I think this may be something that they find to be really interesting. We dubbed this thing house hacking. And so house hacking, I think, is perfect for young, 20-year-olds, probably, mostly single, but, folks in their young 20s. House hacking is the process of buying preferably up to a 4-unit multifamily property, small rental property that you can live in one unit and you could rent out the other units. So the nice thing about house hacking is on a rental property up to 4 units, you can get conventional financing. You could even get FHA, which is government-backed financing, at really low rates. You can go then get this rental property, live in one of the units, and rent out the other unit. And so lots of people who have learned about, the concept. I mean, it's not a new concept. We just kind of gave it a name, the house hacking, because it's kind of cool. So think about it. You go, you rent, you buy this property, you live in one unit, maybe you get a roommate, and maybe you rent out the other unit. You may actually be making money instead of paying rent to somebody. You may be making money instead of paying a mortgage. So house hacking is kind of a really cool concept for especially younger people, because it's harder as you get older. You got a wife, you got kids, or husband and kids, and a lot of people as they get older, don't necessarily want to live next door to someone else or get roommates and things like that. But it's kind of a cool concept, and it's kind of a good introduction to rental properties because you get the experience of managing. You're probably not going to need a manager because you're living next door. You get experience with managing. You get experience seeing the value of owning a rental property, and it's kind of a cool way to start to build up cash flow.
Totally. Yeah, I actually had attempted to do that for my first property here in California. However, in my price range in Southern California and in Long Beach, anything in my price range was just way too bad a shape. It would have needed way too much work. But it was still a good learning experience for me to learn that by doing the due diligence. I ended up just buying a 2-bedroom condo and sort of did a small scaled down version of that where I had a roommate for a couple years here in the condo. That was paying, more than half the mortgage or whatever. And that was still a good learning experience of just buying my first place. That whole buying process and searching and, getting the home inspection, all that kind of thing. Still a really good process of learning for me to then take it to the investment side of things. So final kind of investing question. This will be a little bit more specific to my situation. So I'm going to use you here now that I have you on the line for some free advice.
Nice.
Or just not advice, but insight. So I want to hear a couple of options from somebody skilled and experienced that has seen a lot of scenarios like yourself. So I'm self-employed, and on my tax returns, I basically try not to show that I make that much money, so I don't have to pay that much in taxes. In turn, that makes it very difficult to get any type of loan. I've currently got a mortgage on my condo that I live in. I've got a mortgage on 2 of my properties that I have rented out. So when I've gone to either try to get another loan or even a line of credit, a home equity line of credit on the condo, everybody looks at my tax returns and says, nope, sorry, you don't make enough. Your debt to income ratio is too high off. So knowing that I want to get another investment property and knowing that looking at the traditional styles of financing, whether it be the loan, like I said, or the line of credit, what would be a couple of, just options off the top of your head that somebody like myself could look into? And again, this isn't specific advice necessarily. I just want to hear your insight on what other people have done or what you've seen done in the past when people might be in this type of situation.
Yeah. So I think a good piece of advice, which of course is not actual advice to you, but more. I'm not parsing here. No, I mean I think what happens is at some point, doesn't matter who you are, you always run into this problem. Is you're tapped out, you can't get any more loans, traditional loans. So if you don't have the cash yourself, what do? Right? So I think the most popular way to move forward at that point is to find a partner. And so whether that's your peers, your colleagues, one of the things that most people don't realize is everybody knows somebody who has money. And if you look at what your returns are in the market, what is the S&P 8-9%, historically, what is money in the bank getting you? A fraction of a percent. What is a bond going to get you? So what you can do is you and I are buddies, right? You can say, hey, Josh, here's a rental property. I know you're kind of, you've got some cash on the side. Would you be interested in going in on this property with me? I'm tapped out as far as financing, but obviously I've identified a great property that's going to cash flow. I'm going to take care of one half of this business, which is the management. I'm going to take care of making sure that everything's good to go. I'm going to identify the property. You're going to come in, you're going to be the money guy, and you're going to loan me money, or you're going to take a piece of the property. There's different ways to go. So you can do a private money loan, which is just kind of me giving you cash at X percent. You buy the property, then you go out and whether you maybe fix it up, get it rented out, fix it up, and then refi it, which is going to be a lot easier than actually buying the property itself. Or you and I become partners and I own a piece of the pie, but owning a piece of something is better than not owning anything, right? So I think those are the most popular ways to kind of move forward. I mean, even the big guys, even these big developers, they're not using their own money. At some point, they're tapped out because they've got all these other projects going on. They need to go and find money from somewhere else. And there are commercial banks, but a lot of folks will just kind of go out to their colleagues and their connections and their aunt and their uncle and their cousin, or their buddies, the mailman. I mean, you name it. It's amazing. We interview these guys, right? So we interview folks like you all day long, and the places that people find money is very interesting, and you never know until you ask. And it's not about asking; it's more about letting everybody that know what you do. Mm-hmm. So you may be, whatever it is, you may work in retail, but you started to invest in real estate on the side. So you just tell your friends, when you're hanging out, hey, I buy real estate, I'm buying real estate, this is what I'm doing. And they probably are going to be interested and, want to know more, and you can talk to them and tell them what you're doing. The key is to have a proven track record. So, you want to be able to take what you've done so far, formalize it, put it into a book, mm-hmm. and be able to show. I mean, this is business now, right? I mean, we're not just playing games here. You're asking people for money. The same with the banks. You're asking banks for money. You've got to be professional. So you want to have everything organized, have a binder, have, what your portfolio looks like, what your returns are. If you can demonstrate that to me, I may want to give you money.
Got it. Very cool. So we're going to move on to sort of the second part of this interview, and that is specifically about your business. And so a lot of what I end up being curious about with people is sort of how they, fund their lifestyle and get by without a 9-to-5 type of job. And you left that 9-to-5 type of world of, I guess real estate agent isn't 9-to-5, but, a more traditional job. You left the high school teacher job to just run your online business. So I'm curious at this point, how much of your business or income or net worth comes from your investments versus bigger pockets versus anything else that you have going on? And I'm not looking for, to be nosy and look at your numbers necessarily, but just kind of break up, your pie chart of where your income comes from that supports your life.
So at some point along the way, I realized that I was not able to any longer continue buying property and focus on my business. So I quit a 9-to-5. I was working, X amount of hours on the nights and weekends, which eventually became full-time job. So I left my 9-to-5 to have a 9-to-5, mm-hmm. where I work for myself. And it was it was more lifestyle back then because I was working from home. We had kids. I was raising the kids and working eventually we got the office. We started to hire. And the lifestyle business transformed from a lifestyle business to a company. So today I'm back into the 9-to-5, but it's under my rules, right? Mm-hmm. So that's very different. So for me, I'd say the vast majority of my income is from bigger pockets, is from my company. As far as investments are concerned, I had to step back from investing in real estate because I was working 100 hours a week on bigger pockets. Mm. And I realized that I was letting things kind of fall through the cracks as a real estate investor. And for me personally, I realized that when I do something, I do it at 500%. Mm-hmm. And I can't do two things at 500%. I can only do one. Mm-hmm. So I had to pick one. I had to say, am I going to keep going 500% with bigger pockets or 500% with these investments? And I decided on bigger pockets because I saw, a brighter future, at least in the short term, and I love doing it. Right. And so for me, that was the decision I had to make. Now, that said, I talk to people all day long who are working full-time jobs, investing in real estate on the side, and it works. I just couldn't do it because I was working so hard for so many hours. Yep. As I've started to build out my company, I've started to hire more people, and we've got a staff, and I'm getting more and more free time. I'm not quite there where I want to start delving in yet because I now have 3 kids, and I want to spend as much time with my kids. Mm-hmm. Eventually, we're going to get to the point where I'm going to start, picking up property again. I just, there was that phase where I was just working too hard, losing focus. In fact, the same thing happened to my stock investments. I had a stock portfolio, and I had alerts for stock triggers and things like that. I'd get emails and I'd ignore them. And this was about 2 months ago. I stopped and I looked at my portfolio and I was like, what the hell, Josh? dude, you shouldn't have ignored that stuff, because I was getting killed on a bunch of these stocks that I had. And so I sold all my stocks. I sold all the individual, these were still good companies that were well run. Circumstance was making a couple of them go down, and I bought index funds because, again, for me, it made more sense. Let me just follow the market. Over the long term, the market's going to deliver, and I don't have to worry about handpicking one or two things, and I don't have to sit and babysit it. I can just let it do what it does and just, not worry. And bought it through Vanguard because their fees are low, and that was what I did. So I hope that answers the question.
Yeah, I feel like I can relate to that quite a bit as far as you talking about, it's hard for you to focus on multiple things at once. I feel like I'm the same way. And, currently at this point in my life, I am working on a handful of different things. And I'm starting to realize that something's going to have to give at some point. So I'm curious, what did that conversation in your head look like when you had to decide, like, okay, I'm going to take a step back from the active investing and just focus on the podcast, because you knew that you were that personality type that you had to just be focused on one thing? Like, what did that conversation look like in your head?
So it was, honey, because this wasn't in my head, this was out loud. We're screwing up. This isn't working, right? I'm looking at the landscape that is my life, and I'm seeing, hey, I'm messing up here. I'm half-assing this, I'm half-assing that, and despite best efforts, I am not able to do it, and so I think it's. We have to be introspective, I think. You can't just live life. Listen, you can just live life freely, and that's great, and it works for some people. But I think it's really important, if you are going to be somebody who's going to achieve some certain form of success, you need to be goal-driven. And you need to be introspective, and you need to go and be evaluative of yourself on a regular basis. And whatever that means. Some people say do it once a week. Some people say do it every morning. I don't have a formal process, but I'm fairly self-aware. So when I see something going wrong, I could kind of nip it in the bud pretty quickly nowadays. But I wasn't always that way. And I just was like, oh, what's going to happen today? And, let today just come to me, versus saying, I've got a decision to make on how I'm going to live my life. I'm going to not necessarily plan everything to the T, but I want to be successful. In order to be successful, I need X, Y, and Z to happen. In order for X, Y, and Z to happen, I have to actually recognize it and put it down, put pen to paper. And so, writing your goals down, writing down what it is that you want to accomplish, how you're going to accomplish it, seeing it, visualizing it, planning it, plotting it. That's how you become successful in anything. The best people on the planet work hard to become the best people on the planet, and you can attest to that. So, it takes hard work. And so it takes planning, hard work, and self-evaluation. And so, for me, it wasn't any epiphany, but it was a series of stop screwing up. Okay, I'm done. We can't keep screwing this up.
Yeah.
Let's change it.
Got it. Very cool. So sort of going to the next phase then after you decided to go full bore with biggerpockets.com, when you got to the point where you needed to start hiring other people, you said now you have a staff of about 19. I assume that didn't start overnight. So when you got to the point where you had to start hiring other people or outsourcing tasks or delegating to other people, was that difficult for you to sort of let go of some of that control and to trust other people? And kind of walk me through that process.
It was horrifying. It was really scary, man. Yeah. So let me walk you through very, very quickly. Assume we're close to 11 years now that I've been doing this, right? So for the first couple of years, it was me. I did everything. Now, eventually I hired a guy to help code the platform, because I got to the point where I couldn't do it any longer. I wasn't as skilled as I needed to be. So I hired a programmer. And, one guy, then another guy. But it was the programmer that was in place next to me. Did that for 8 years. Well, that's 7.5. Josh and programmer. So I did everything. I managed every other part of the business, which is why I worked 100 hours. And the programmer did the development. eventually I came to realize that I had built this really cool lifestyle business, but I didn't have a life. There was no style. There was no life. I was working 80 to 100 hours a week, and it was crazy. And many times along the way, I thought about quitting, and I probably could have. I probably should have. But I was stubborn and didn't want to lose, and so I kept at it. And eventually, I got to the point, I just said to my wife, I'm like, this is crazy. I can't keep doing this. I either need to get rid of this, or I got to figure something out differently. So I went and I hired a consultant to come in and evaluate the business, look at what I was doing, look at the business itself, and help me figure out how to get to that next level and transform it from a lifestyle business that no longer afforded me a lifestyle and turn it into a company, because I had ambitions to build a company that was going to be bigger and better than I had done so already. I could have stopped at a certain point, and it would have been a lifestyle business, but I always wanted to do more. Mm-hmm. So hired the consultant. Consultant said, man, you gotta hire some people. You need a staff. You're doing too much. Mm-hmm. And so we looked at what was the one person that I could hire that would offload the crap that I didn't want to do anymore, mm-hmm. or the stuff that I wasn't as good as I should have been. Mm-hmm. And so we ended up hiring a guy. His name's Brandon Turner. The guy's amazing, still works for me. He was my head of content. He was going to manage the content. He was going to lead the content, because we are a huge content engine. And so he was going to come in and take over that, which would allow me then to focus on the business side of things. And so he did. And he came in and he really helped me transition out of that. Now, it was scary. It was horrifyingly scary. So we did it in little tiny bits. And the interview process was me literally just talking to him for weeks and weeks and weeks. He didn't need a job. The cool thing was he was actually one of our success stories. He was a guy who came to Bigger Pockets, found the site, learned about real estate, and at 27 was able to not have to have a job anymore, which, I'm frankly pretty jealous of. But, he had written for me. He was a writer. He was writing for me. And we just talked. We're like, hey, how can we do this? How will this work? And we were just kind of feeling our way through what are the skills that he had? What are the things that he can do? And I realized that I trusted him in his writing. I trusted him in his judgment. So let me bring him on to do that. And I couldn't afford to hire somebody else. That was it. But by hiring him, it freed me up to do the other things. And then little by little, I was hiring, we'd making a little bit more money because I was freer and I could focus on the business. And then I could hire the next guy and the next guy and the next guy. So I've never taken money to grow my business. I mean, this has been a complete bootstrap. I haven't taken VC or angel funds. So it's all been kind of figuring it out, finding a way to kind of take the capital that I have and put it back into the business and use that to hire the next guy. And we've continued to grow it using that method, but it's scary. Every new hire is really scary, and you put a lot of trust in people, especially in the early days, who, if you hire the wrong person, they could really screw you over and they could really turn the business the wrong direction. So it's exceptionally important that they have the values that you have and they have the vision that you have.
All right. So we're running a little bit short on time. I'm going to ask you one more kind of business-related question, then we'll get on to our quick hit section. So sure. In your bio on the website, it says, when Bigger Pockets becomes a household name, I'll have achieved the first of many of my vast goals for this site. So knowing that you're somebody that's goal-oriented, and you kind of talked about writing down goals and having a vision for things, can you tell me another one of your goals for the site that, something maybe specific that you have in mind that you want to achieve?
I would say I would love to be profiled by, say, the Wall Street Journal and New York Times, one of the business, big business media, and have them look at Bigger Pockets as kind of one of those success stories that I'm not taking anything away from these guys, because boy, oh boy, I wish I could be like an Uber or an Airbnb or something else and have a $50 billion, $25 billion company. But a lot of people think that the only way to build a startup company is to go out and get other people's money. And I think and I'm not alone in this, have proven that you don't need to do that. If you are smart and work hard and stick to it, you can make something that even people have told me along the way, even VCs have said, Josh, you should have shut this business down. And I said, no, I see the vision for it. I'm going to stay at it. So, don't ever let anyone tell you no. Don't ever let anyone tell you can't do it. As long as you believe in it and it's realistic, the realistic part's got to be there and it's realistic, work it out. But I would like that story told more, because there's so much emphasis on, oh, this guy just raised this money and this guy just raised that money. That's great. But are they successful? Are their businesses actually making money? That's a sign of a successful business. We're making money, we're growing, we're helping, tons of people, and we've done it without having to raise money. That's a pretty cool story. And again, I'm not alone in that. There's tons of stories like mine, but I want that story told more. So that's another goal is for us to kind of have that story out there and keep telling it.
I like that. Cool. So we're going to move on to our quick hits section, and these can be answered pretty quick, or if you want to elaborate a little bit more, that's fine as well. First up, how do you decompress? You talked about working 80 to 100 hours, and hopefully these days you're not working quite as much. But as a business owner, you've got a lot of things on your mind and on your plate. So how do you decompress?
I go and hang out with my kids. I used to be a skier. I used to ski race, and that was my thing. And frankly, I wish it were still my thing. I just don't have as much time to do it, which kills me. But I never would have thought this, because again, whether it was that or skateboarding or whatever, windsurfing. I mean, I love sports and outdoors. It's hanging out with my kids. These days, they're old enough, so we're hiking in the mountains. Living in Denver, the proximity to glaciers in August within 45 minutes is pretty cool. And so just getting out and being in nature, but hanging out with my kids and being with them, for me, allows me to decompress.
Cool. If there was a movie made about your life, what would be the obstacle or the kind of hardship that you had to overcome in order to achieve your success?
Ooh, man, I wish I listened to the show more before I jumped on. That's a good one. That's a really good one. What?
And some people don't necessarily have any big, life milestone necessarily. And actually, personally, I don't have anything that crazy in my life. But, if you do, I'd like to hear it. And if not, we can skip it.
I think there've been tons of obstacles. I'd say, oh man. Oh, this is tough. I don't know if I'm gonna have a quick answer for you. I think a lot of it was personal. I think a lot of who I am today took a tremendous amount of time. I used to be very self-conscious, and I think a lot of young people are. And I cared about what everybody thought about me, and I cared, what my image was, and was concerned if, I look goofy, or, I'm, not presenting myself the way that the world sees me. And that was probably one of the biggest obstacles in my success and in my life, was kind of overcoming that desire to be good for other people, instead of realizing that I needed to kind of be myself and accept who I was with all my flaws, because I got a lot of them, just like everyone else, and understand that, overcome that. So it's nothing revelatory, but I think
that's a good solid answer, and it really makes a lot of sense. And just a quick follow up, there might not be a short answer for this, and that's all right. But was there any one catalyst that sort of helped you overcome any of that?
That's a great question. I think there were a few. I got some pretty good advice in high school from a friend of mine who told me to live my life the way I would want it lived if I were lying on my deathbed, sitting surrounded by my family, the people who would actually be around me on my deathbed, and make sure that I lived my life in a way that I was at least doing good for those people. So that was one kind of philosophy that kind of helped me. But I think for me, it really came because I got into the entertainment business. I was an actor, not a successful one. I worked on other sides of the business in the casting and independent film production. I worked at an agency and a management company. And I saw that it was all BS. I mean, it's cool. We all look at TV and magazines and see all these shiny, beautiful people, but when you're in that business and you meet these, you meet so-and-so who's looks so cool and is amazing and they're just a big fat a-hole, or you stop and you think, and you're like, man, these guys that we worship, they eat, sleep, and do other things that we all do, and they're human. And we shouldn't be idolizing anybody. We're all, listen, a guy who's successful, it's great to admire them, but to idolize and be concerned about, what their image of us might be or other people's image of us might be, I think that it was kind of putting all that together. So seeing how people treated other people, seeing how people kind of broke people apart, allowed me to say, it's all nonsense. It's all, you don't like that woman for that role because you think that she looks like your second cousin who, stole money from you when you were 6 years old. You're not hiring her for that job because she looks like your second cousin who took money from you when you were 6 years old. That's crazy.
Yeah.
That's crazy. We can't judge people on that. And I don't want to be judged based on who I am, what I look like. I just want to be judged based on the fact that I'm doing good for myself and for the world and for other people. And that's all that matters to me.
Great. So have you had any mentors throughout your life? This is another question I like to ask people.
I think I've had lots of mentorship. I don't know that I've had a single formal mentor, so to speak. In my business, I've certainly asked people for advice along the way. I wish I had a mentor. I think it would have helped me achieve success a lot sooner. I look up to my mom and grandpa and other folks in my family who've built businesses, but I never really kind of turned to them to ask for help. So I don't think I've necessarily had, like folks who work for me. I think we all mentor each other, which is kind of cool. And we're always growing and we're always like, hey, go find a new book, read it, and spread the word on what you learned to the rest of the team. I think that stuff is great. But, I wish I had a formal mentor, but I don't think I have, though. I think it's huge, and I'd encourage everybody, if you have an opportunity to go and mentor under somebody, do it, because you can learn so much.
Yeah. Couple more questions. When do you feel like you get hit by inspiration or ideas the most? Is there a certain time or a place that just seemed to be really conducive to that sort of creative mindset?
Shower.
I've had that answer before. That's interesting. Yeah.
Yeah. That's my place of peace. I could turn on the shower and I could be there 2 hours later. But yeah, it's just the shower. My head starts turning or it shuts off. It's one or the other. And it's usually a conscious decision too. Mm-hmm. It's like, I'm going to just sit here and not think about anything, or I'm going to just go. And if I go, it just goes.
Very cool. All right. And last question, but certainly not least, do you have a favorite quote or maybe a favorite piece of advice that someone has given you?
I think it goes back to that piece of advice I had mentioned earlier that my friend gave me. I think there has been nothing that's been as impactful to me, which is, again, think about your life through the lens of you on your deathbed. Mm-hmm. And, who's there? It's probably the people who care about you most and people who you care about most. So if you're there, you're on your deathbed, can you look them in the eyes and say, hey, I lived a life that was a good life. I had a fun life. I got out there and did the things I wanted to do. If you can do that, then you've kind of lived the life that you want to live. Now stop and deconstruct it. And what did that life look like? Mm-hmm. What did you do in that life? What decisions did you make? And then take that. You're not going to be able to piece it together, but now take that and use that lens in everything that you do and every decision that you make. So for me, it may come in the form of we're looking at somebody to partner with. And I stop and I say, okay, well, we can make a whole hell of a lot of money partnering with this company, but I'm going to look back and, kick myself in the pants for having done that. I'm going to make the decision to not make the money because that's the lens that I live under, which is the money is not all that matters. It's living the life the way that I want to live it and making decisions that I want to make. So for me, that was just so important, and it helps me be who I am today. And I think I'm a pretty ethical guy, and I think I'm not a religious person at all. But I think I'm a moral and ethical guy, and I think I make decisions based upon a good set of values because of that.
I love that, man. I feel the same way. Not necessarily because I got the same advice, but I'm not a religious guy either. But I firmly believe in solid morals and values and stuff, and I think that's really great. So obviously, biggerpockets.com is the place to go to go learn more about this stuff. But is there anywhere else that you want to direct people to either connect with you or plug any of your other things that you have going on?
Sure. So Bigger Pockets is, it's this amazing community, 320,000 people who are, whether they're just getting started in real estate or whether they're successful, they're linking up. We've got a couple books that we publish. So, look up Bigger Pockets on Amazon. You can find our books and the podcast. And, I'm going to put you on the spot right now. But, maybe we can even have you on our podcast talking about your real estate and who you are. I think that'd be a whole lot of fun. And the Bigger Pockets podcast, obviously, we interview for those people who may be interested in real estate. We interview guys who just bought their first rental property to guys who've done hundreds of millions of dollars in real estate. And our goal is to do similar to what you're doing. We're trying to deconstruct how they got there, what got them to where they are, how they've grown their businesses, things like that. And it's really cool and it's fun and we're silly and I don't walk away from a single show without saying, hey, I just learned something. So I think it's a great place to go to learn about real estate.
Yeah, I would love to come on there anytime. So just let me know.
We'll have Hillary reach back out to you.
Perfect. Love it.
We'll make it happen. Awesome, man.
Cool. Well, I will go ahead and plug my social networks. Of course, you guys can connect with me on Instagram, Twitter, and Facebook at FatTonyBMX. My personal website is also FatTonyBMX.com. Please go check out the show's website at theexpansionprojectpodcast.com and click on the right side of the taskbar over there. There's a couple affiliate link banners for Nutrisuma, Chef Kate's Nut Butter, and Amazon. So click on those banners, buy some stuff. It's going to help out the show. Also, while you're at it, please subscribe to the show on iTunes so you don't miss any of the episodes. And while you're at iTunes, please give a 5-star rating and leave a review. I'm going to continue to read out some of the best reviews here on the show. And that's not just to feed my ego. That actually does help other people get exposed to the show and helps bump it up in the iTunes rating and everything like that. So thank you guys for listening, and we'll catch you next time. And Josh, thanks again. This has been a blast, man. I appreciate you coming on.
Thanks a lot, man. It's been a pleasure.
All right. See ya.